G'day, this is Jason here, and it's Sunday afternoon, and I almost forgot to do this video. I didn't mean to almost forget, but it just clicked in my mind, and here I am. So I told you, I don't know, either Thursday, maybe even Wednesday, Thursday and Friday, Friday, I told you that I'm going to be showing you a whole bunch of divergence, but more so on a investment, um, model kind of thing. This is the weekly chart that is in front of you right now. As you can see, it says 22nd of July, 2012. This is in 2012. Okay, I can go back even farther, and like I was saying in the video, just on Friday, that the patterns were the same 10 years ago as they are today. They're still the same even another 10 years back. It is what it is. It's all human emotion and some manipulation too. But anyway, that's nor here nor there. Let's take a look at the setups, okay? Let's start off with this one right here in 2011, okay? We'll start right here from 2010. The starting of 2011 is right here. So here we go. So we have to do the first trade, which is right here. Okay. We have hidden, hard to see divergence right here. And would have got long right there. You only have to look at your charts once every week. That's it. Unless you're really close to where you need to take profit, near a support or resistance level, right? Like right here, okay? I want to show you. There was like when the price came up to here, right here, you would be looking to take profit because of this wick here. And that's what they did. They took profit and they took it right back down to here. See? It went back down 300 pips. Oh, by the way, this is the pound dollar, Great British Pound, US dollar pair that we're looking on the weekly time frame. Just taking some water there, some aqua from the Great Lake of the world, Lake Huron. I was gonna say here, Ontario. I was driving around here, Ontario yesterday in Mississauga, Canada. Okay, so this trade here that we would have done, we would have got in on the starting of the week right here. Our stop would have been down here, 500 pip stop, ladies and gentlemen. But remember, this is investing where a way to long-term invest, where you could be in a trade for a month, 2 months, 3 months. You know what I mean? So there's 400 points right there, but our target is 520, which was, there's 540. You would have hit it right there. Okay, your 1-to-1 win-loss ratio. Now let's keep going, right? Now this here, I would enter right here because I could see it went up to here, didn't quite make it to the double top, but still, let's just draw this like this, okay? Double top, forget, that's like, if we were to go on the monthly, that would be like a big wick, I think, right here. Okay, and we put on down here, see? That's divergent, man. That is divergent. So we would have got in right there on the opening of this week, right here, this weekly candle. So would have sold right here. Stop would have been 470 pips. and it went down 800, almost 2-to-1 win-loss ratio. Okay, then we had another setup, not here, but let me show you. Hard to see, hidden divergence. Right here to right here. Yeah, okay, I missed it by one. Same deal. I missed this by one too. See, you could fiddle around here for an hour to do it if you want. It's like you only have to look at your charts once a week, man. Once a week. That's it. The rest of the time, enjoy life. Spend time with your wife and kids, or spend time with your husband and kids. You know, whatever. Have fun. Enjoy life. This is how you do it, where you don't have to sit here and, 12 hours a day staring at your chart trying to find a trade. This is the way to trade if you want to have your time to live your life as well. Okay? So, would have sold right here. Or I myself probably would have sold right here as it was coming down. So I guess you'd have to check it out near the end of the week, just keep an eye on it. Maybe check it once a day for like a minute. You know what I mean? But other than that, it's once a week, okay? So anyway, let's say right here, we would have got short just underneath these 2 wicks of candles. So you would have sold it right here. Your stop would be at the nearest swing high. So that's 318 pips. Did we get our 318 pips? We did. Okay, let's keep going. What do you call this? You can call it a low and a lower low, or even a double bottom. And look at this, man, look at this. So beautiful. Look at all these setups on the weekly, man. You can be making thousands and thousands of pips, ladies and gentlemen. And we got a long way to go yet. It doesn't stop here. This is only 1 year we've looked at, okay? 1 year. We have another 11 years to go. And I'm going to do them all. This video might be long, so if you got something to do, go do it. Okay, so I think we had a cross right there where we could get in on the opening of the candle right here. So if we have a low and a lower low, that's regular bullish divergence. Easy to see divergence is what I call it. Now the stop would be 357 pips. There's 400 pips. There's 707 pips. That's your 2-to-1 win-loss ratio. Now let's move on. What do we have here? We have a high and a higher high. Right there like that. Now we would have got in. See, it's not perfectly perfect here. Let me show you. Let me put the lines on here to make sure. I think this one's higher. Oh no, it's very slight. 6566. Let's see what this one says. Yeah, it's lower. This one's 67. This one was 65. So yeah, it was divergent. It was divergent, 100%, even though it doesn't look like it. But whenever you need to check it, just pull the chart up here, and you can see the mountains and valleys so much easier. And then you can go and confirm it. Is it divergent or is it not divergent? Okay? So, there we go. Right there. See, would have got short right there. Stop would have been 500 points. Look at that. 518 points to the 520. Actually, 530 pips to the bottom. You would have got your 1-to-1 win-loss ratio. Now, let's see here. Yeah, here's another one. They just don't stop. It's on every turn we have divergence, ladies and gentlemen. This is the weekly. See that? Down and up. See? And we of course needed to wait for the 5 to be above the 7. Okay? So if you got in right here on the opening of this week candle, okay, your stop would have been 486. There's 552. There's your 1-to-1. Just think, in 1 year, you do 1, 2, 3 trades, and you're good. You've made like, let's see, let me count it up here. We just want to show you this. 300 here. We made 490 there, so that's 800. And then we did this one, 430. So that's 1,200 pips right here you've done in 1 year. If you're trading one standard lot, that's $12,000. If you're trading two, that's $24,000. You know, trading 3 standard lots, that's $36,000. That's probably almost what you make in a year. Well, not you. Many people, a lot of people are lucky to make around 30, 35,000. These, in this time with this high inflation, you need to make like 50,000 or 70,000 just to slide by. It's so crazy. All done on purpose, by design, by our wonderful, wonderful Gov. You know who the Gov is. Yeah. Why they do this? Oh, so all the rates on your mortgages will shoot way up so they can make more money. Why does this war start? Oh, because then they can make the gasoline and the oil go up. Yeah, it's a crazy world, man. Crazy world. Okay, let's move on here. Let's move on. We got a high and a higher high. Hi, how are ya? Like I said, if you have something to do, go do it, because this is going to be a long video, but I'm going to show you trade after trade, success after success is what I'm going to show you. Okay? And it's going to take a while. All right. Okay. So, you would have got in right here. Our stop would have been 550 pips. And it went down 1,000. That's almost 2 to 1. Look at that. In 3, 4, 5, 6, 7 weeks. 1,000 pips, man. 1,000. 1,000. What do we have here? Is it another divergence setup? No, it can't be. Can it? Actually, I'm missing one. I gotta show ya. Right here to right here. And right here to right here. I think this one, I don't know, you would have sold right here. Your stop would have been 270. It never failed us. 322 pips. We would have got our 1-to-1 right there. Actually, there's another one. Holy jeez, there's a lot of trades in these setups right here. Right here. Right here. Okay. Yeah, right here. And you would have sold right on the opening of this sucker. Your stop is always right up here at the swing high. Let's say 400 pips, and it went down 500. Then what did we have? I didn't put my arrow in here. Right there. Then we had a double bottom. Remember I told you about those trades where we have a huge river valley or mountain valley, and then we have a little one? This is screaming at you, buy, buy, you motherfucker, buy! It's gonna go way, way, way up. It's gonna be a good trade. Buy, buy. Remember I told you that? big valley, little valley, screaming at you to buy this sucker. And sure enough, it went to the moon, man. So if we bought right there, our stop would have been 580 points. Let's just say 600. There's 800. Into the next week, you keep holding on. As long as the 5 is above the 7, you keep holding on and holding on and holding on. It almost crossed there. Here it did a little bit, but that doesn't count if you know what my filter is. Okay, and up here, this is the pound dollar, ladies and gentlemen. This was 2013 and 2014. Do you see? Didn't cross here either. Do you see all the way to the top? You made 1,784 pips, man. You see that long trade? That was like being in a trade for a year. I remember actually doing videos and telling everybody in this long run up, I was telling everybody, stay long, stay long. I got them in like way down here. I wasn't even trading. Well, I was trading divergence, but because I started in 2011, but I wasn't that experienced with it. But anyway, I was telling people back then, maybe you're one of those people right now that are listening and you remember this. I told you, stay long, stay long, stay long, stay long, all the way up to the top. 1,800 pips, ladies and gentlemen. Oh, that was a beautiful trade. You know, you can also do the same thing you do on a 5-minute chart. When you have lower closing candles that come back into the 5, this dotted line, which is the 5 exponential close, okay? Shift 0. You can buy this dip, see? Lower closing candle, buy, up it goes. Lower closing candle here, you want it to touch the 5. Buy it, up it goes. See right here? Buy it, up it goes. Buy it, up it goes. All the way up. See, here's another one. Buy, up it goes. You can make so much money just trading these little, I'm not going to call them scalp trades because you're on a weekly time frame. Okay, let's move along now, Jason. All right, now, do we have divergence up here to sell? Oh, we do, we do. We definitely do. Now, if we drew it from this peak to this peak, it's not divergent. But if you drew it from this one, you're only supposed to, like right here was the setup, the sell, basically. But my filter stopped it. So you'd have to wait all these weeks until it actually crossed down to get in. Okay, but the divergence setup was back here. Right here like this, which matches with this. So you would have got in short right here, maybe even right here. You wanted to be sure. So you got in short right here. Your stop would have been like 400 pips. And how far did it go down? 1,800 pips again, ladies and gentlemen. This was in 2014. Do you remember that move? Oh, I remember. I remember looking at it. I remember when I was looking at this chart like this, I remember I was babysitting my great niece, Ava Bell. She was only like 2. She's like 12 now or 13 or something. Anyway, she was so cute. Yeah. Okay. So we have a low and lower lows, just like that. And look, what do we have here? What do we have here? We have a deep valley and a little tiny valley. It's telling you, buy, buy, buy now. So you would have got in long. Oh, that dropped in the wrong place. There. So you would have got long right here. Your stop would have been 600 pips. Went up 650 pips. You would have got that in 2 weeks. Right from there. 1 week, 2 week, you would have made 600 pips. Then what did we have? You know, it's so much easier to trade like a weekly time frame because it's not like a 5 minute where, oh, whammo, oh, it's gonna, you know, you think about doing the trade and by the time you finish thinking about it, it's gone. It's gone forever. It like flew up into the atmosphere. You know what I'm saying? It's like it's gone. But on the weekly time frame, oh, you got so much time. You can sit there, play twiddly thumbs, or pick your nose, or do whatever you want before you get in the freaking trade. You know what I'm saying? Oh yeah, man. Like, look, here's the high, here's the high, here's the high, here's the retracement, and here's the higher high, right? Guess how many weeks went by before you got in that trade? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, man. 10 weeks. That's 2.5 months you would have waited to enter this trade. Oh, I think I need to take a break. I'm going to pause it, even though you won't notice the pause. Talk too much. All right, I'm back. Took a little breather. Okay, this is the year of 2015, okay, that we're in here. It was a real crappy, you know, last 6 months of the year. So, you would have got short right in here. Right on the opening of this, your stop would have been right here, 400 pips. It would have went against you 240 pips. Would have freaked you out a little bit. And then it went down. What's our stop? 426. There's 500 pips right there. There's 1,200 pips. 5 didn't cross up over the 7 yet, so you still could have stayed short. Total maximum potential of pips, 1,500 pips. I'm not saying you would have got 1,500 pips. I'm just saying the max potential was 1,500. Okay? Okay. Beautiful trade. Now, see, there was only 2 trades in 2015. Only 2 of them. Let's move on now. And what about this one? Where was that? Oh. 2013, we had 1, 2, 3, 4 trades. Can you imagine doing 2 to 4 trades per year and making thousands? Not 10 pips or 20 pips, making thousands of pips. You know, if you're into this for the long haul, this is the way you got to trade. Because you won't spend all this time in front of the computer, and as long as you do your money, you know, management correctly, within 4 to 5 years, you could make a lot of money, is what I'm trying to say. You could retire. You know, when you trade a 5-minute chart, you're looking at the next 30 minutes, okay, or an hour. This, we're looking far out, like 5 years. And you could make a lot of money. You could make so much money that you could probably retire from your job in 5 years if you'd be willing to trade like this. That's why I'm doing this video for you guys. I wanted to show you this. Okay, let's move on. We're moving on now to 2016. Okay, here's a trade right here, low and lower low. Didn't look too promising though. It's like that. So, it looks like we would have got in with my filter, that is, right here. Right on the opening of this week, right here, you would have bought it here. Went up 300, but yeah. Let's see. 700 pip stop. No, never even went up 700. It only went up a couple hundred pips. So, do you want to know what this is right here, this baton, this big baton, this is the weekly time frame. What happened in 2016? Brexit in Britain. From the low to the high of this 1 week was 1,800 pips. So this is a trade. If you would have got in here, you could have lost some pips. I would have put my stop here probably after we were up here. And anything near Brexit, I would have just got out. I remember there was this one day where it moved like, I don't know, it was moving in the hundreds at a time in like seconds. I was trading it. I made $1,400 that in about 3 hours in the Asia session or something. It was a lot of fun. But yeah, to trade that on the weekly, well, you know, anything around here, you probably would have got out because it's Brexit, man. There was talk of Brexit, like British Columbia, Britain wanting to, you know, wash their hands with the rest of Europe. So that's why I did that. So we had a big move there that week, and we had another big move down here. The charts kind of got messed up after this. So anyway, let's move on. So that one probably would have been a loser for you, for sure. But look, how many thousand pips do you have back here? Thousands if you started back in 2010. So then, here's that double bottom. From right here to right here. Or you can take it, forget. I don't like to really draw them from wicks. So low and a lower low, same thing. You would have got in right here. So if you got in here, your stop would have been down here 500 pips. So it didn't go anywhere. It only went like up 100 pips in your favor, and then they took it down here. This would have been scary, but it didn't hit your stop, and then it kept going and going up 1,100 pips, up 1,200 pips up into the end of the year. But anyway, let's just take it to here. Went up 800 pips. There's your 2-to-1 win-loss ratio from your entry point of right here. Now, over here, okay, look at that double top, eh? Right here, from here to here. It's the same thing in reverse too, where you're looking for hidden divergence, which I call hard to see divergence. Okay, you can have, instead of the deep river valley in the front, it can be in, you know, it was in the back most of the time, right? This can be opposite because it's a continuation trade with the trend. So it's, you know, it's rallying up, doing a pullback, and then going higher. So this is the trade. I hope I explained what I just said right. I don't even think I understand it. Oh, Mozi Tabernak. Okay, so we would have got in long right here. Stop would have been 278 pips. And it went up 1,000 pips, ladies and gentlemen. Okay, look. Isn't it funny how there are all these trades just on every corner? It's amazing. That's why I love divergence so much. It's the only thing that I've ever found to work consistently for me is this. And I'm not the only one saying that. There's a trader, he's left a comment on this channel, and he wished me happy birthday too. His name's Lucky. He said the same thing to me. That the only thing he's ever found that actually made him some pips is divergence. So, anyway, it is what it is, ladies and gentlemen. Okay, you would have got short right there. Our stop would have been right up there, 380 pips. It went down 1,300 pips. Don't you find it strange? I just want to ask you guys this question, whoever's been watching so far. Don't you find it strange that all these setups I get in, except for this one, this was the worst one, that we get in the trade and it never comes back to your stop? Hardly ever. And even on the weekly, hardly ever, ever. Don't you find that strange? I'm sure you've heard me saying that what's so great about divergence is the fact that when we get in, they've already went after all the stops. We get in after they take out the stops, and where we get in, we're in the flow with them, taking it to whatever direction that they're going to take it without going back to the stop. It's the same thing most of the time, even on a 5-minute, even on a 1-minute, but there's times it comes back on those lower time frames, more so than higher time frames. And this, you can trade this on any time frame, ladies and gentlemen. 1 minute, 2 minute, 5 minute, 10 minute, 15 minute, hourly, 4 hourly, 2 hour charts. You name it, you can trade it on all of them. You know, daily, weekly, monthly. Yeah. I wouldn't go any farther than that. I wouldn't really want to do the monthly, but anyway, you have to wait a year before a trade sets up. But oh, it'd be a good one when it does. Okay. Did I already measure this one? I think I did. 400 pips, stop. Went down, yeah, I already measured it. 1,300. What do we have here? We have a low and a lower low. Oh my goodness, again? Divergence again? Actually, there's divergence right here. Right here to right here. Can't miss this one. See, if you're trading a 5-minute chart, it's easy to miss a trade here and there because it's going so fast, you know? But on the weekly, you come and you look at it and you go, oh yeah, maybe eat a couple pieces of pizza, have a beer or two, and go, oh, okay, there it is. Yeah, it might take you a minute or two or after a couple of beers before you go, oh, now I see it. And you get in the trade. That's it. You know? It's not like in a 5-minute, you're all rushed, you're all panicked, you're all freaked out, you just had a loss, you need to do another trade to get a win, and you think you see divergence and you don't, and then you do it and then you lose. You know what I'm saying? This is so much calmer, so much better, so much less stress. You know what I mean? Oh. Wrong arrow, wrong arrow, wrong place. Oh, it's right here. Okay, where is this here? Yeah, I'm only... See how this line looks so much longer than this one? It's only longer by 1 bar on each end of it. But it looks like it's like half an inch. It's just how these charts deceive your eyes. That's why I'm always checking with the crosshair. Do I have it in the right spot? No, see? It needs to go there. This one here, see? It needs to go here. It deceives you. See? It still looks longer, see, than this one. I bet you it is longer. It's just the way the charts are. I don't know. I never really measured that or checked it out. Let me see. Oh, I'm curious now. Okay, curiosity killed the cat. Do you hear that smack? That's my measuring tape. You know, like as if I was going to cut a piece of wood to make a shed. Anyway, this line here, measuring it with a measuring tape, is a 1/4 inch longer than this line here. Okay, not that you needed to know that, but I was just curious. Okay, let's move on here now, Mode Z. Okay, that was the, oh, here, just let me draw it. Okay, so if we sold it here, the stop would be 500 pips. I don't think it went 500. No, it didn't. No. It only went 385. So even after, you know, it came right back up to here, you could have cut the trade and took your 100 pips and said, okay. But if you waited, thinking it was going to keep going down again, it was just a pullback, well, you would have got out right here. You would have got out, yeah, right here. You would have got out break even on this sell trade if that's what happened. Okay, let's keep going here. So we got a high and a higher high. We're now in the year of 2019. We're getting close to being done. A high and a higher high. And yeah, it's kind of like divergence, right? Yeah, that goes there. That goes there. There. See, it's still divergent, but very slightly. All right, we would have got short right here. Okay. Right on the opening of this candle, we would have got short. Our stop would have been 400 points. And it would have went against you about 180 pips. But if you look at that and compare it to a 5-minute chart, look at it in the same way that, oh, it went against me 18 pips. You see what I mean? Because it's a 5-minute chart. But on the weekly, it's much bigger moves in these candles. So it's 180 points. But you got to look at it in the same way that, oh, it's okay. You hold on. And it goes down 975 pips. Just like that. Look, we're finally come to a trade setup. There's no trade. We have a low. Then we have a lower low. But look. There's no divergence. So that brings us up to here. Now we're starting in the year 2000. We're almost done, ladies and gentlemen. I know this was a long video, but it was well worth watching because any of you who, you know, you want to make money in trading, but you can't seem to do it on a 5-minute chart, this is your answer. You can look at the daily too, but there's more noise in the daily. You're a lot safer to do it on a weekly time frame. Okay, just took a little break there. Gotta love it with recording. You can pause the recording until you're ready to talk again. Okay, so we had divergence right here up here at the beginning of 2020. Right here. We had a high and a higher high. And a high and a lower high on your indicator of choice. Some people like to use the RSI. Some people like to use the MACD 2-line. And some people like to use other things. I like to use this indicator right here. It shows it so much better than all the other indicators. And that's why you see me using the OSMA. With standard settings, that's all you need. And the standard the standard settings are the exact same as the MACD, 12, 26, 9. They've never changed since I've been trading, since I've been looking at charts from September of 2005. They have not changed. They're the same, and they still work. Yeah, so here we go. Right here was the cross down. Right here was the sell. Stop was right up here. Let me show you. So you would have entered the trade when the 5 crosses down below the 7, okay? So you would have got short right there. Your stop would have been 585 points. And did you know what this was? This big spike down. Yeah. The C. The C word. The bad situation that never should have happened. That's all I'm going to say about that. Went down 1,500 pips. Okay? And was there divergence down here to buy? No, not at all. Because that deep dip created too deep of a dip. This had no chance of coming back down here again to create the divergence that we wanted to see. So there was no trade to buy off of here. Okay, and then it went up and back. But then, if you waited, you know, a few months, when it came over here and did a retracement, yeah, from right here to right there. See if that lines up right. Oh. We got to bring it over one. Okay, that still would work. That still would work. It was divergence. It wasn't perfect, but it was divergence. And we would have got long right up in here. So your stop would have been at the closest swing low, 392 pips below, and to the end of the year, it went up 600. Into 2021, it went up 1,200 pips. You would have got your 1-to-1, 2-to-1, even 3-to-1 win-loss ratio. Now, what do we have up here? We have a high, and then a retracement, and then a higher high, which is an M. Ding, 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 ding. That's the letter M. What does the letter M mean? Sell, sell. What does the W mean? Buy, buy. Okay. Here we go. So you would have sold on the opening of this candle right here. Your stop would have been 470 points. And it took a while. There's 600 pips right there. You would have got your 1-to-1 for sure. Now, we're into 2022. So right here to right up here, let's say. Just like that. And we would have got short where? Right in there at the opening of this candle. So we got short right here. Our stop would have been 493 pips. Or even if you wanted, because there was such close support right here, maybe you'd want more confirmation, so you'd wait for it to you know, break through that support and close below it, which it did here. Okay, and now just let me show you. It would have worked out either way you would have done the trade. Okay, so all the way down, it went down 2,900 pips, man. That's crazy. That's just so crazy it went down like that. Yeah, and then we're back to today here. Look at this craziness. Wow. Anyway, so if you did get in right here, okay, because you wanted to, let me just put a line. You wanted it to, you know, break and close below this support level, you would have sold it here. And either way, it would have worked out for you. Okay, and do we have a trade down here? It looks like we don't, right? But we do. We do. Just have to draw out a little bit of a farther divergence span, right? That's all. There it is. Does it line up? Oh yeah. Lines up perfectly. So you would have got in right here. You would have got in here. You would have had a huge stop, 1,200 pips, right? But who would put that much of a stop? So, you know, right here, maybe you put your stop, or right here, 800 pips. And did it go up 800 pips? Oh, yeah. There's 800 pips right there. Now, let me show you the trade of this year, the current year. This is the last trade. I'm going to show ya. Took a while, but I think it was well worth it. Well worth you guys watching it, even though it looks kind of like the same, you know, stuff I'm doing in my video every day, you know, but it is the same kind of setups, but it's on a weekly chart. It's showing you hundreds and thousand pip winners, ladies and gentlemen. Okay? Now, I want to stress that if you're planning to trade weekly charts, trade currency, okay? Because it's just like if you trade like the NASDAQ on the weekly chart, or you know, something like that, it can be a little, you know, full of hairballs. You know what I'm saying? It can be wild. It's a wild ride. It's totally different market movement. It's crazy. Trade that on a smaller time frame. If you want to do this, you know, you can trade the euro or the pound. I would stay away from the Swiss franc because you can't trust them Swiss bastards. I've seen twice where in 1 hour it moved like 15,000 pips. Okay? And it was just major manipulation from the Swiss. Major manipulation. They shouldn't have been able to do that, but they did it. And they destroyed brokers and traders all over the world. Don't trade anything Swiss franc. Okay? Say bye-bye, Frank. See ya, you fucker. I ain't trading your fucking shit. Because out of nowhere, they'll kill you. I don't touch anything. I don't touch like the Euro Swiss, the Pound Swiss, anything Swiss. Swiss US dollar or dollar Swiss, whichever freaking one it is. Don't touch. There's lots of other pairs. There's lots of other major currencies. You got like 5 other majors to trade. You don't need to freaking trade the Swiss franc. Okay? Futures also. It's just called the Swiss or Swiss franc, or I don't know what they call it. Just don't trade it. Trust me, don't freaking trade it. Anyway, let me draw this last trade here. Where did I see it? Oh yeah, right here. See that beautiful pin bar? It's saying bye, bye, bye now. So if you would have bought right here this year, this was exactly March 12th. Okay, if you would have bought here, your stop would have been just at the low of that pin bar, 381 pips. There's 400 right there. You would have got your 1-to-1 win-loss ratio. You see, with divergence, I like to shoot for 1-to-1 risk-reward, right? Because I know it hits it like a very high percentage. And going for 2-to-1, well, you can, but you got to remember the market trends only 20% of the time. It chops the rest of the time. Okay, but on a weekly time frame, I guess we can reduce that number I have burned or welded inside my brain. I guess you could say it trends for longer. Maybe 60% trends and 40% chop. I don't know. You see this nice trend down. You see this nice trend up. Yeah, there's trends. See, trend up, trend down. Here's the chop on the weekly. That was bad. See? So anyway, if you're tired of sitting in front of your computer screen all the time, don't do it. Trade the weekly time frame. It's your safest trading time frame. If you need to do a little bit more trading than that, then trade the the daily time frame. So how I would trade that is I would make sure that if I found a sell trade right in here, okay? Let's put some lines on. Let me show you this. Then I'll wrap up the video. So right here, we knew that the trend closed down, okay? So this is the weekly time frame. Okay? Now we're going to step down to the daily, and we're going to scroll back to those two lines. Is there a trade? Oh yeah. So we know it's bearish on the weekly, right? So you look for a trade on the daily. That you can only look for a sell trade. Okay? So you take this to here, and this to there. And where's our trade, ladies and gentlemen? On the daily. It's right there. See, we had one trade up here on the weekly all the way down, right? Well, here's a second trade that you can do on the daily, but you gotta follow the trend of the weekly in order to enter the trade successfully. So you would have sold here, you would have put your stop right here, 200 pips, and it would have went against you a little bit here. But believe me, there's 260 pips right there, and actually kept going. There's 600 pips. See? That's how you would do that if you wanted to trade the daily. You confirm with the weekly. It's the same thing if you're trading a 5-minute and you go look at the 15-minute. I've already showed you that on my daily videos. If you want to try and not make a mistake, but today it didn't do that. on the NASDAQ, it showed that there was a sell divergence trade for the top, but the mother fookers sold it down. They sold it off. But usually, a lot of the time, it's just a little dip along the way before it goes higher. So anyway, I hope you just learned something here at the end of the video. I hope it helps you in your trading. Anyway, once again, this is Jason Sweezy from Divergence Trading, and I want to thank you for listening to this long video and watching it, and I hope you learned stuff from it, and good luck and good trading, and we'll see you on Monday, tomorrow. Good luck and good trading.